going to get ready to rock and roll. We've got a lot of ground to cover, so I'm excited to be able to have this opportunity to cover it with you. I just want to take care of a couple of quick things in the background here, and then I'll be right back to get the program started. All right, folks. Well, we are ready to get rolling with today's program, and I appreciate and very gracious that all of you have honored me with the opportunity to speak with you and work with you. Like I said, when we originally developed this maximum performance webinar series, the goal was to bring a community of learning together for originators and top real estate professionals so that we can really focus on really fine-tuning our skills and developing them to the level that they need to be for us to be able to make a difference in our communities and make a bigger impact on growth within this industry that we so in many cases dearly love and dearly want to do everything we can to make it a better environment for the consumers, for the borrowers, and the business development partners that we have the opportunity to work with. Well, today's program, we're going to be focusing on guaranteed results, what it really takes to create consistent growth, consistent momentum, and a consistent flow of business. And the way that we do that is by looking at what are the success secrets of the most successful top-performing originators. And of course, today, my guest panelist is a very knowledgeable, very experienced, and very seasoned originator and mortgage banker with over 29 years of experience, and just some of the things that he's done and some of the things we'll introduce you to a little bit later in the program are some very exciting new things that Alan has developed a patented, yes, a U.S. patented business process, not patent pending, but an actual accepted patent that he holds for a business process for a guaranteed mortgage quote. And we'll be introducing you to that system a little bit later in the program here. But the first step of the conversation is really why. When it comes to purchase business, we all know that it really depends on a handful of things. But one of the most important things it depends on is how we drive purchase business. And there are, yes, certainly ways to generate leads via online sources like Zillow and places like that. There's also, plenty of ways to network and prospect within your own sphere of influence. But one of the best ways to generate purchase business still to this day is to network with people who are interacting with buyers and sellers right at the time they're about to sell or buy. And that means working with realtors to help them overcome the challenges of the current market. So there's a couple of key conversations we're going to introduce you to today that are going to have an impact on your ability to elevate your credibility with the realtors in the market in which you work. And the reason I say elevate your value and credibility is look at it from this perspective. I mean, the first question we got to be prepared to answer when it comes to approaching realtors is, why should I work with you? I mean, at the end of the day, in fact, maybe you and I've actually had some realtors ask me that point blank, and maybe you've had that same experience. So if we're not prepared to address that question, by the way, even if they don't ask it outright, it's the number one question that's at the back of their mind when we're approaching them to discuss with them the possibility of doing some business. So one of the key things that we've got to think about is how to elevate our values. So if you look at value as a mathematical equation, first thing you've got to think about is value equals benefit minus cost. Now there's two ways to balance this equation. If they have a loan officer they're very loyal to, if they have a loan officer that they feel does a pretty good job, that has a decent reputation of accurately and timely pre-approving loans and communicating well throughout the course of a transaction, and and closing on time, which are the three basic expectations that realtors will tell you if you ask them, what do you expect from a lender that you choose to work with, or what are the things you like about your current lender, and what are the things you would improve about that lender if you could. One of those three areas is going to come into play. How well they pre-qualify, how well they communicate, and how frequently they close on time, which a lot of that has to do with expectation management as much as anything, but even that stuff is all transactional. We're only as good as our last deal in that case. So if the benefit is equal or equivalent, and by the way, we all know that 99 out of 100 loan officers promise the same stuff, and if we're really honest with ourselves, if 99 out of 100 promised it, 98 out of 99 completely fail to deliver it, have we elevated or lowered our credibility by associating ourselves with all the other mistakes of the past that have been made by other loan officers? So the reality is there's only two ways to transform that relationship. One way is to lower our cost. The other is to raise our benefit. And the way that we think about how to raise our benefit to a business development partner like a realtor is how we can be the asset and resource that transcends beyond the value of one transaction. Now, you guys have heard me talk about this 2 ways to compete, lowest price or most valuable, many times. Think about, making a stock purchase. I have $10,000 I want to invest. I can go to E-Trade, I can open an account, and I can buy 100 shares of a company worth $100 a share for $9. Or I can go to a full-service financial advisor, make that same purchase of that same 100 shares of company stock, and probably spend in the neighborhood of $150 to $200 in commission for that same trade. And likelihood is I probably will spend in total 12 to 15 times more to do the investment through the full-service investment advisor. Now, why on the planet Earth would I be willing to spend 15 times more for the same purchase of the same stock? Well, because the reality is, if I buy it at E-Trade, I'm up to my own knowledge level and experience and ability to evaluate which company is the right company to buy, and it's a much riskier investment, which means there's a much lower probability of a successful return. Versus if I go to the Merrill Lynch advisor, he's going to give me the specific advice, guidance, and based on a tremendous amount of research in the background, and help advise me on how to make a wiser investment and how to manage that investment and financial growth strategy over time. And in many cases, he may even go well above and beyond the purchase of one individual transaction and really become more of that true value-based, long-range advisor-type relationship, helping not only help me take the money that I've got and invest it wisely, but also help me strategize how my family and I are managing our finances to achieve a better goal over a better result over a shorter period of time, because he's really taking it to that next level of advisory-based services. So when we think about the relationship with the realtor and we think about how to enhance that relationship, one of the best ways I know to balance the value equation is to think about how can I become such a valuable asset to the agent that I'm the irreplaceable resource that they can't afford not to refer every seller and every buyer to every single time, regardless of whether or not that buyer is pre-approved with somebody else. And the way that I do that is by providing them tools, value, resources, guidance, and support that goes well above and beyond the value of any one transaction. When I've become that true business development partner, another way to look at it is, why partners? Well, think about it from this perspective. There's an old Jewish proverb that says, plans fail where there is no counsel, but succeed when counselors are many. When we leverage the strengths, assets, and resources of those around us who can see the bigger picture, the outside perspective, and what we don't know and what we can't see right for ourselves, we can create a much, much better and much more significant result. Take a look at this for just an example. I've always been fascinated by these draft horses, and around the turn of the last century, there was a study done about how much weight one of these horses could pull. It was eventually what became known as the horsepower studies, which became known as the unit. That's where the unit of measure of the horsepower was derived from. Anyway, long story short, you had two horses. One draft horse, the regular average was about 12,000 pounds of pull that one draft horse could pull. You had two working independently. They could do at least double the results. The scientists ran into a little bit of a problem when they tried to scale up the study. When you hitch two working together pulling on the same load, the results are over 104,000 pounds of pull, or roughly 8 times the results of what one could do separately or independently. So what we're really looking at is when we get two people working together for a common goal, if you leverage those strengths and synergies and assets and resources and unique talents of both of those partners, and the 8 times result holds true, you would expect to be able to generate 8 to 10 times as many leads instead of the 30 leads the agents could generate by themselves. We would be looking at maybe 100 to 120 leads that we could generate if we leverage each other's strengths effectively. Now, why does the horsepower thing work? It's because of a simple mechanical concept called the lever or leverage, right? Now, here's the problem. If the tool's not used properly, it doesn't have a lot of value. I mean, take this example on what I see on the screen. If I push down with 100 pounds of force over here, I get 100 pounds of lift over here. I haven't really accomplished a whole lot more than what I would have been to if I just bent down and picked up the box on this side, right? But what happens if I shift that pivot point just a couple of feet to one side? All of a sudden, I can push down with 100 pounds of force over here, and I get 1,000 pounds of lift over here because I'm effectively leveraging or creating what's also known as a mechanical advantage of 5 to 1. Now, what is the leverage of creating strategic alliances and key resource business development partnerships with agents? Well, one of the first things we have to look at is, are we on the taking or the giving side of that relationship? My best successes in business and in life, and when I left retail production the first time around, I was averaging about 20 loans a month purchase business. I closed 237 purchase transactions my last 12 months in retail. And by the way, it was 80% government, FHA, and VA annual underwrite full doc loans. It was not your squeaky clean 800 FICO, fast and easy type loans back then. My team and I put in a lot of hours, and we worked really hard to be able to consistently close that volume of business. But one of the things we realized very early on in that growth curve is that people won't care how much you know until they know how much you care. If I approach them from the perspective of what I want for me, I get very little done. If I approach them from the perspective of how I can help them accomplish what they want to accomplish and how I can be a key asset or resource in helping them accomplish it, then I get a lot more traction, I create a lot more value, and I can transcend that relationship from one of being the guy who gets their deals done to the guy who helps them get a lot more deals. And one of the key elements of that is just remembering a simple concept called the second law of caring, which says we don't know what we don't know until someone cares enough to show us. I mean, think about all the cliches you've heard over the years. Can't see the forest for the trees. We get so busy being busy, we forget to be productive. I mean, think of the 5 to test, the 3 to 5 best agents that you know in your market right now. I bet if you sat down and thought about it for just a handful of minutes, you could come up with the number 1 or 2 things they could do better that would allow them to do 20, 30, 50% more business, right? The agent who's just all over town scattered, hardly keeps a calendar together, is missing appointments frequently, and really drops the ball when it comes to lead follow-up. The agent who's spending way too much time with way too many buyers, and they follow the traditional model of get them in the car and get them, show them a house and close a deal. That's a lot of times the typical mindset of the realtor because they're very reactive. That's how they've been trained, or they've received little or no training, and so they just do what they've seen everybody else do, which is basically scramble and react to the opportunities that are around them. And their way of adding value in a traditional market is get them in the car, show them property. That's how they build value and rapport with a potential client. But is that the right way to go about it in a market where pretty much every buyer is going to be looking at multiple offers on every piece of property they want to buy in the tight inventory of most of the markets around the country today? And how much of a waste of time is that for that agent to spend all that time, energy, and effort with the buyer who may or may not be really ready to buy right now? So it comes down to how do we create a layer of value, support, and guidance? How do we show the agents what they don't know that can hurt them because we care enough to help be that support resource or guide? It kind of comes down to this whole concept of accountability as well. So think about, what do these guys all have in common? What do the top performers in the sports world have? The Michael Jordans, the Tom Brady's, and Wayne Gretzky's of the world. Oops, got my pointer backwards on that. Well, the answer is they all had somebody who cared as much about their own success as they did, if not more. person who challenged them to look at things from an alternative perspective, who got them to think about and look at different ways of doing things, or to encourage them and support them in reaching to the next level with their growth curve. See, we can become that accountability partner for the business development partners that we seek to develop. And as we start looking at how to create those initial relationships with agents, when we start talking to them about the tools, resources, and realities of what we can provide to them and support them in their growth, then we can have a significant impact on creating value. And what I mean by creating value in detailed respect is thinking about the things that are costing them money, time, or potentially both. So like, for example, one of the key first conversations we teach our coaching clients how to have with a potential realtor is what we call the value of time conversation. Now, you know, there's really two different versions of this. One is if you're in a balanced market or a slower market where where you're not looking at buyers in a competitive bid situation all the time, and that's really just kind of a comparison of the amount of time an agent would spend with a bozo lender versus a good, knowledgeable, reputable lender who does an accurate job pre-qualifying the loans. And how much time does the agent have to spend babysitting deal with the bozo lender versus how much time would they likely spend with us? And then, of course, we want to walk them through a thought process of really outlining exactly what that time frame looks like. Okay, that's one model of the value of time conversation. But for most of us in the type of market we're in right now, where we're in a real tight seller's market, there's limited inventory, and buyers are finding themselves in a competitive bid situation most of the time, what we really need to get realtors to think about is the traditional model of throw them in the car and show them a bunch of houses the best way to secure a deal? And how much time are they losing by putting buyers ahead of the game by essentially putting the cart before the horse? Because we all know that if we get into the situation where we have a buyer making a competitive offer and they don't already have a really solid pre-approval in their hands, they're going to get creamed. The seller's not even going to look at their deal if they don't have a solid loan approval in place. And they certainly are at a very significant disadvantage when it comes to negotiating. So when we talk to agents about, Mr. Agent, let me just give you something to think about. I may be completely off base, but tell me if there's any truth to what I'm sharing with you here, Mr. Agent. Think about, in a tight seller's market, how often the borrower gets the cart ahead of the horse. You know what I mean by that? In other words, they get all excited about a property, they rush into being ready to write offers because they've fallen in love with the home, and we know there's multiple competitive offers coming in at the same time, so they throw us in this pressure cooker environment where they're expecting us to drop everything and do a pre-qualification, which means more than likely the lender who's doing a quick over-the-phone pre-qualification without any verified or validated documentation is probably missing things that could blow that deal up. And the merit of that pre-approval is very thin because it doesn't have a substantial amount of substantiation. How much better off would we be, for example, if we slowed the process down a little bit, you introduce me a little bit earlier to the buyer, maybe even before we get them out shopping for property, so that I can do an accurate, thorough, documented, and verified pre-approval or pre-qualification or guarantee mortgage quote, which will introduce you to what that next layer is. What most loan officers are doing right now without the guarantee mortgage quote system is they're doing a verified, validated pre-approval. Maybe even taking it one step farther and getting that documentation submitted to an underwriter without property, so you actually have an underwriter pre-approval, which, by the way, the CFPB, not chicken fried peanut butter, the Consumer Financial Protection Bureau issued a policy statement to consumers a while back that indicated what the differences were between a pre-approval, a pre-qualification, and in the CFPB's definition, a pre-approval is a underwriter validated and verified review of their ability to qualify up to a specific loan amount and term. In other words, a loan officer can't issue a pre-approval. A broker can't issue a pre-approval because only the lender can issue an actual pre-approval. The actual accepting lender's underwriter, up to this point, is the only person who can actually issue a fully verified pre-approval. Now, many of our companies don't even allow us to do that. Many of them, have weighed the cost-benefit of it and are okay with the risk of letting buyers out to shop. The other element of that is, as we're talking to realtors about this conversation, again, it comes back to this one key thing. Mr. Agent, what's the value of your time? Can you really afford to spend time showing property to buyers who are really not fully ready to make offers? And what do we have to do in advance of them being fully ready to make offers that puts them in a strong position when it comes to the offers that are being written? And that's where that value of time conversation is. Now, what we can do to enhance our value to the agent at that point is say, look, my job as your production partner, your business development partner, is to protect your time. I'm going to help you be more efficient and make more money in less time by only working with approved buyers who are ready to make offers. I get everything else, okay? The leverage that we're creating in that respect is that we are only introducing them to the buyers that are 100% ready to go. Because we know out of every 10 buyers we talk to, 1 or 2 have all their stuff in order. They've got their perfect credit and they're 20% down and it's well documented and verified. We've looked at all the ghosts in the closet, like the 2106 expenses and the unreimbursed business expenses, or the percentage of ownership of the business if they're W-2. I did a loan one time for a Mr. Martin, who was the 1/7 owner of E.A. Martin Machinery, and as a result of his percentage of ownership, the company corporate tax returns had to be pulled into the underwriting process. That was a little bit of a squirrely deal, especially because we didn't realize it until about 13 days before closing, and it was a real firefight to get the deal done on time. But those really ready-to-go buyers, for example, are the first bucket, and those are the only borrowers that we want the realtor talking to or working with. When we help realtors understand that, look, we need to, first of all, very quickly identify who are those ready-to-go buyers. Everything else, let me worry about. My leverage to you as a business development partner is I'm going to take the questionable bucket, and I'm going to work to get them through the thorough documentation and pre-approval process through to underwriting so we can get a formal review. I'm going to go through and incubate the leads that maybe have some minor hurdles to overcome that could be cleared out in a couple of months, like maybe getting rid of some debt to lower some ratios so they can fit within the margins what they need ratio-wise on the homes they want, or they need a little more seasoning on the length of time of job, or to other things that are barriers to their ability to qualify. And as I do that, I'm talking to the agents about the importance of only working with the ready-to-go buyers and how we take that buyer all the way through that process and how we create that additional leverage. Well, one of the other ways we can do it is like, for example, don't necessarily assume the authority or jump in pretending to be the know-it-all of mortgage lending. Give them some tools and resources that they can use to validate the quality of the pre-approvals that they're already getting from other lenders. Now, validate every deal. The whole point here is we want to make sure we're doing a thorough and accurate job up front of looking into all the different elements of a borrower's ability to qualify that have an impact on their ability to complete that loan. And so we're looking at an application questions review and a tool that Alan has provided from Guaranteed Mortgage Quote here. I didn't get a screenshot of it up here, but there's a third document that we're going to be sending to all of the registrants here for this webinar that will talk a little bit about some of the key areas to look at for validation, some of the things you don't normally see on the 1003, that what you don't know can hurt you. The other thing we could do is we can give agents this value of time tool, which is just a couple of drilled down questions to ask or to encourage a realtor to think about and ask a competing lender who they're receiving pre-approval offers from. Again, this works for both listing agents and selling agents. And keep in mind, by the way, there's another business strategy we're going to talk about here in just a minute I'm excited to introduce you to, which is kind of a selling the seller strategy. But even talking to sellers about the fact that, when they're looking at pre-approvals, or listing agents are looking at pre-approval offers from other lenders, what are some things they need to look at to see whether that's an accurate or as close to accurate as possible pre-approval that's been completed? Because, again, we want to educate them on saving them time and money. That's how we become a key asset. resource, and tool. So as we start to look at some of these additional strategies, there's some key elements of what I want to introduce you to, and this is where I'm going to ask Alan to kind of jump in and tell us a little bit about what Guaranteed Mortgage Quote is, why it's different and better than just your standard lender pre-approval. So Alan, why don't you kind of jump in here and share with us a little bit about, I mean, first of all, tell us a little bit of the background. How did this all start? Where did this come from, and how did you get in this?
It started, Eric, out of my frustration of knowing that I was closing every loan that I had initially approved, and not only was I closing it, but I was closing it on all the terms that I had guaranteed. I wasn't doing what people in the industry call switching up the borrower, maneuvering the borrower into a different loan. I got known as a person that when I said the loan was going to close, it closed the way I said it would. And I did have some frustration because a lot of people go out into the marketplace and they make that claim, but not everybody can back the claim up. So I wanted a way to prove to realtors, financial planners, attorneys, and a regular consumer who may contact me without a referral from another professional that I was going to deliver to them exactly what I promised. And so to do that, I came up with a concept of the Guaranteed Mortgage Quote. And the Guaranteed Mortgage Quote essentially says, I have not as a loan officer made a mistake when I issued your initial approval. And if I did make a mistake, I'm going to make a financial payment to you. I'm going to give you, say, a $500 Guaranteed Mortgage Quote. Now, you as the consumer, you need to verify all the information that you told me, and you need to maintain your status through closing. If you mess up your credit or you lose your job, that's not on me. But as long as you verify and maintain what you told me, this loan is going to close the way I said it would, and if not, I'll pay you. Now, nobody wants to get $500 and be left with their boxes packed up in their apartment and nowhere to go. But it's the fact that you're willing to put your money where your mouth is that will show to people that you really have the confidence and that you're a full-scale professional and that you can deliver. Now, do you want me to continue on, Eric? Do you want to switch slides? By the way, have you started the recording, Eric?
I did.
Okay, great. So yeah, I'm going to speak mostly because we have limited time today in terms of realtor referrals. The realtor is concerned that the deal that's supposedly pre-approved is going to fall apart. That's why they come to you and they want to see the DU or the LP findings. Now, they may not know what those findings mean, but they want to see them. They want to see a copy of the borrower's bank account that has their down payment money. Again, they don't know some of the other problems that can come up about deposits that can't be verified, or the money's coming out of a business account, the business can't support the withdrawal of the money, etc. But they're really nervous that the deal isn't going to come through. So now this gives you the opportunity, if you're looking for a reason, to come in and talk to a realtor about why they should refer you business. You've got a unique way now to come in using the patented system. We've got all the forms for you, all the guarantee forms. It's all, you'll get a little computer panel. You'll be able to go in and generate everything. There's really nothing for you to do except enter in the individual details of each property and each borrower. And you can now come in and do a meeting to an assembled group of realtors, and we've got some software that backs up this guarantee that we've been working on every day for over 4 years, and it's just ready to be released. So all these questions that you normally, when you're doing a good job, you ask a borrower questions that are not on the 1003. 1003 doesn't ask about zoning. 1003 doesn't ask about unpermitted additions to the property. Doesn't ask if there's somebody else's name on the bank account. And we know the list of all these questions that when you do a good job, you ask them. But until now, there hasn't been a way to systematically record them. So we've got all these questions laid out for you on this software. and you can go into the realtor meeting and find out from them, do they know what happened to some pending transactions they had that fell apart? And so as they tell you the reasons that this deal fell apart and that deal fell apart, you'll be able to be showing on the software that you asked this question. Now, you were already asking this question, but now you can show them that in the software you asked this question, and then at the end of the presentation you can tell them, not only are we using this software, but I'm so sure of the quality of my approvals. We don't issue pre-approvals anymore. We issue guaranteed mortgage quotes. We're making a guarantee to the buyer that if we made a mistake, we're going to pay the money. And there's the ability as well to give a guarantee to the seller. So if you want to give a guarantee to the seller has to call you within 3 business days to register their guarantee, and that gives you now a chance to talk to the seller about the financing they may want on their next transaction. And if there's a reason the seller accepted your buyer's offer over somebody else's offer is because it was backed by a guarantee, well, then they're likely going to want a guarantee to back their next transaction. On the previous slide, there was something about making pre-approval stickier, and I want to go back to that, Eric, if I could. You know, we spoke to Lending Tree, and I'm sure a lot of you folks here know it anyway. You issue an approval or a pre-approval, and out goes the borrower shopping, and they go to an open house, and there's another lender there. Or they don't find a property for a while, they lose out on an offer or two, they flit off to another realtor. So these initial pre-approvals, they're not that sticky. You may be issuing a lot of them, but they're leaving you. Well, if they know that you're giving a guaranteed mortgage quote, you're not just giving some worthless pre-approval, first of all, they're more likely to stick with you through the process. And what it's going to do, a big factor here is to accelerate the realtor and the MLO sales cycle, so that if 2 offers are made, one is backed by a pre-approval, one is backed by a guaranteed mortgage quote, the price is similar, the seller is almost certainly going to take the one backed by the guaranteed mortgage quote. And the realtor, both the selling agent and the listing agent, they have a fiduciary duty to their buyers and their sellers. If they have an opportunity to suggest which of the 2 offers to take, and one's backed by a guarantee and the other isn't, they're going to have a lot of nervousness if they make a recommendation to the pre-approval and that deal falls apart. Well, what's the seller going to say? Why did you have me take that offer? Why didn't you have me take the one that was backed by the guarantee? So if you're the loan officer offering the guarantee, and you and your realtor win the day, well, now you and the realtor each book a piece of business. You don't have to worry about that borrower flitting off a month from now. You book a piece of business. The other loan officer and the other realtor who are working with their pre-approval, what do they have to do? That realtor has to start showing more properties. That loan officer starts having to issue more pre-approvals, right? Because most of the time they're property specific. They're looking at another property they want to offer on. They're offering a different amount, so they want a property specific pre-approval. So they're going spinning their wheels like hamsters in a cage, and you and your realtor partner are out working with the next borrower looking to book another piece of business. All right, Eric, I think that covers that slide. If you want to move forward.
By the way, folks, keep in mind that feel free to go ahead and post some questions in as you're thinking of them. We're going to be at the Q&A here in just a handful of minutes. There's one other business development strategy I want to make sure we introduce you to before we jump to the Q&A. But, Alan, you kind of hit on it just a little bit about the approach to sellers and how this system engages you with getting the access to the seller of a property and what the benefits of that are. But anyway, if you want to go ahead with your next point, I want to make sure we get back to that point before we move to the Q&A.
Sure. Now we've had, I don't have anything in writing, but I've had a lot of contact with the National Association of Realtors, and they're aware that this is coming up. And some of the top realtors in the country like the idea, especially that you can extend a guarantee to the seller. So again, does the seller want to have their deal fall apart and get $500? No, they don't. But will the seller feel more comfortable when you are guaranteeing your work? And will that listing agent be more likely to have the seller, even if there's not competing offers? Are they more likely to say to that seller, look, we've got a guarantee here for $250, an offer backed by a guarantee for $250. Now, we could hold out for $260. But who knows if that's going to come in pre-approved and if it'll ever close. So not only do you get to leverage to the seller if there's competing offers, but if your buyer's offer is a little low, and that can be another benefit to your borrower to tell them, you know, you could try a little lower because you're backed by a guarantee. And it might carry the day. Now, if you want to come up to $260, and we feel the house is worth $260, fine, but you can try a little lower because you've got that power. And some of these other things here are more the things that your company's going to be concerned with. We should tell the folks, Eric, we can only let this get signed up by lenders. Unfortunately, brokers cannot participate. As much respect as I have for brokers, because if you had to pay out a guarantee, you'd make less on that loan. And under Dodd-Frank, you can't make less. So it can only be offered by a lender, and it has to be a sign-up at the home office. Now, if the home office only wants to let one branch start out, if you're a loan officer, you're a branch manager, and home office can just let you start. You don't have to have the whole company start, but the agreement has to be made through the home office. So these are some of the things they're going to like. You're only sending in applications that are going to close. You're increasing your underwriting and your processing functions. You're asking the customer for everything up front. So if you've got some loan officers that are a little herky-jerky and they use this complete 1003 software, they're more likely to ask every question up front. When they ask the proper questions up front, they gather all the proper documents up front. That's the customer's biggest complaint, is they keep getting asked for documents through the process. Now, sometimes that's really tough underwriting, but sometimes the originator really forgot to ask a question. If they had asked it initially, in that example that Eric gave, if they had been asked at the bar, would you work for a family company, and they said yes, then those documents could have been requested at the beginning instead of 10 days before the closing. Okay,
exactly.
Eric.
And we could have saved a lot of stress, anxiety, and frustration. Yeah. I mean, there was a couple of key things in what Alan said I want to make sure we reinforce here, guys. I mean, and keep in mind, this is a system that would need to be set up at the company level. So if you are an originator who's wanting more information about participating in the Q&A, this is a multi-step conversation. This is not just something that you're going to be able to pick up tomorrow, sign up, and start using as an individual loan officer. By the way, if you are in a broker environment, there is a way to make this work. It incorporates developing a strong relationship, partnership with a wholesale lender that you work with. And if you happen to have a good wholesale lender that you want to introduce this to or help us introduce this to, there's a good possibility we can help them get started with to be able to offer you this kind of quality of service. But the most important thing about this is it's doing what we need to do. I mean, often I teach realtors when we approach them from the beginning. It's at the end of the day, Mr. Realtor, I don't want to be just the guy who gets your deals done. In fact, I'm not even going to ask you for referrals right up front, Mr. Agent. Because the practical reality is, if I can't do an accurate and timely pre-approval, if I cannot, communicate well throughout the transaction and make sure I close on time, I don't deserve your business, and neither should any of the others out there. But what my goal is to be an asset and resource to you that's going to help you do significantly more business, Mr. Realtor. Now, a lot of times when I say something like that, they'll say, well, what do you mean? Well, one way that we do that is, we can create an increase in purchase volume by looking at a couple of key different strategies. Now, in previous webinars, you've heard me talk a lot about the active opportunity mining system and how that generates a flow of repeat and referral business. But this system, one of my favorites, and the reason I like some of what Alan has said with this Guarantee Mortgage Quote software that he has available, is the fact that it makes it really, really easy to approach the seller. There's a strategy we teach our coaching clients, which is called the selling the seller strategy. It actually originally started from my good friend Greg Frost, who is using this and has used this for dozens of years. Of course, those of you who do not know who Greg is, he was in 1994. He was notated by Mortgage Originator magazine as the first billion-dollar originator. He was the first one to cross the billion-dollar funding threshold as an originator. And he didn't do it in a high-index market either. He did it in little old Albuquerque, New Mexico, where his average loan amount was $120,000. He literally closed over 10,000 loans in 15 years between the early 80s and mid-90s to achieve that designation as the first billion-dollar loan officer. He said one of the things you always got to think about is, you know, I love it when a realtor tries to use that brush-off technique of, you know, well, I only deal with listings, I don't work with buyers. Well, okay, great. I love working with listing agents. Two reasons. One, it's real easy for me to help you pick up an additional commission by working with your seller to recognize that you can be valuable to them as a buyer's resource when they buy their next home. Because, I mean, if you think about it, how many sellers are buyers? I mean, what percentage of homeowners go from owning a home to renting? Not many. I mean, the practical reality is, and I've seen some NAR statistics, that somewhere in the neighborhood of 75 to 80% of homeowners will sell a property and buy within 30 miles within 30 days. Well, when you've got a system like Guaranteed Mortgage Quote, you've got an opportunity to use that system as a very easy way to help your realtor understand the value of talking to their seller, doing a mortgage review and pre-approval analysis up front as soon as they list the property to make sure that they are going to be in a strong position when they start hitting the market to try and buy when they accept a contract on their property. And so that's a great way of not only getting access to the seller to pick up an additional loan opportunity, but also to get the seller to want to give you access to all of the buyers that are making offers. Because when your seller understands the value of a guaranteed mortgage quote versus the pre-approval that most loan officers issue, the seller's going to want their buyer or potential buyer to have a guaranteed mortgage quote, right? They want to know that that buyer is really 100% ready to buy. And it's a lot easier to get the realtor and the seller to understand that and want to encourage that seller to not only own that property, but the 4 or 5 or 6 or 8 people who show interest, serious interest in that property, the realtor is going to be heavily motivated to call you and introduce you to those 5, 6, 7 additional potential buyers who you have an opportunity to win business from. So you can kind of see how this could expand on a massive scale and generate a huge volume for you in a relatively short period of time. All right, well, I'm going to open it up for questions right now. Okay, so there's some feedback and comments in the queue here, Alan, that I wanted to go through. I don't know if you've had a chance to be watching this as going up.
I don't seem to see them. Go ahead, Eric. Go ahead.
Okay, well, Alan, just so you know, it's under the questions tab.
Oh, yeah, closed up when
panel.
I sent you that little comment, so...
That's right. Go ahead and open it back up again so you can kind of read what's here, but I'll go ahead and read off a couple of the questions. One of the comments posted, and actually this gentleman's a good friend of mine, but indicated that CFPB recently has started to show some concerns about the word guarantee under Reg N, although I'm wondering if that's a typo. Anyway, this comes from the Division of Finance at our state level here, who just returned from a conference. CFPB presented at it. His recommendation is delete the word guarantee from our vocabulary. I know, Alan, that you've done a tremendous amount of research and development work into this. I know that you are, you know, by background, you know, you have a lot of good connections with attorneys and that kind of thing. How would you respond to that question?
Well, we thought about calling it at one point the guaranteed mortgage, but in fact it isn't a guaranteed mortgage. We're not guaranteeing that a mortgage is going to be granted, and it's very clear on all the paperwork that the guarantee is that we're either going to deliver the mortgage we promised, or we're going to pay this set financial amount if we don't. Now, we are, you know, naturally we have regular updates with our compliance folks, and our compliance team is counsel to one of the state mortgage associations and, full-time compliance attorney. So this is a person that, say, I know she has a 12-hour day, every week, where she just sits home in front of the computer and monitors all the regulatory websites. So, if somebody has, had the impression to completely get rid of that word, well, we'll if that needs to be done, we'll get the same concept across with another word. But as of now, if you like the concept and you just don't like what it's called, if it becomes necessary to switch a word, we'll switch a word.
Right, and keep in mind, guys, that again, this is set up at a company level. So if your company has some specific concerns about some of the positioning or wording of it, we can make the adjustments necessary because the system's flexible enough. And Alan, I know you and I have talked about this before, so I can say this with confidence that you have the capability of making those adjustments.
Sure.
And I guess the key distinction here is that we're not guaranteeing they're going to get a mortgage. We're guaranteeing that that we will we'll pay retribution if we are unable to deliver a mortgage based on the terms of this initial mortgage quote guarantee. And so as a result of that, we're validating the accuracy of our pre-approval. We're validating the accuracy of our terms that we're proposing to offer to the clients, and therefore giving them a much higher confidence in their ability to go ahead and purchase. I mean, and again, just so you know, by the way, guys, I've actually looked at the documents myself. They're very well written, and they've been thoroughly reviewed by a whole team of attorneys. I mean, Alan, I know you. I mean, how many years in research and development were you in this project?
Well, it's been 9.5 years. It was 5.5 years to go through the patent process, and it's almost sad that we got the patent. That it took, after 5.5 years of research, no matter what it was called, they found that no mortgage company had ever guaranteed their initial approvals. And then it's been 4 more years to make the software thorough, to have all the compliance work done, to have all the documents and everything easy to use for each lender on a control panel. And it's a very powerful system, but we've made it so it doesn't take you forever to learn it. I think an hour or two, you'll be comfortable using it.
Yeah, definitely. And guys, I as you probably know, well, and maybe you don't know on this audience, if this is the first time you've been on one of our Maximum Performance webinar series, I take a very high degree of responsibility as CEO of Maximum Acceleration to make sure that we're only bringing a best-of-breed product to your information, and I do a tremendous amount of due diligence and validation behind the scenes before I introduce folks to a particular program or product. All right, so the more secure buyer. Okay, so there's some other great comments. Most of those comments are now circling around, okay, how do we get access to the system? So let's go ahead and hit that real quick, as we kind of go through this. Alan, if you don't mind, kind of take us through, just kind of a refresher of what, remember, this program does, what are some of the P's and Q's, and then how do we get started?
Well, I think I covered it pretty carefully that, you want a way for the loan officer to let everybody in the process know that they haven't made a mistake and that their approvals are going to close. If the customer has to do their end, they have to verify and maintain their data. They can't go spend their money. They can't go mess their credit. They can't lose their job. But if the customer does their part, you're promising, maybe the promised mortgage quote. I mean, I got a lot of respect for the regulatory environment, and if we got to call it the promised mortgage quote instead of the guaranteed mortgage quote, I just got back. I was at panels out at the Bankers MBA conference out in Las Vegas a few weeks ago. So we'll take that comment under advisement. I appreciate the person that made it out there from Missouri, and we're happy to talk to you. Is probably the best way. We'd like to talk to you. If you have somebody at home office who can be on the call with you, is ideal. We'll give preference to folks that are in either a compliance position, operational position, or sales and marketing position at home office. But we will get back to everybody, and ideally we would like to set up a phone appointment with you, but via email. So if you can say, look, these are 2 or 3 times that we're available, and we'll email you back and say, okay, set the appointment this way. It just seems with phone tag, it can be tough. But if you want to play phone tag, we'll keep at it until we're able to reach you and set an appointment time.
Yeah, definitely. And you guys, those of you who are interested in getting a hold of the information, we're going to show you just real quickly how to get a hold of this system. I mean, keep in mind that, there's a ton of benefits to this program, and when you think about the value of saving time and developing that key, loyal, committed partnership, I mean, the fact of the matter is if you're offering an agent and you're the only lender in the market who has the ability to offer a guaranteed mortgage quote that is quoting a promise of delivering on time and on term, then you're going to set yourself light years ahead of all of the other competitors who are just doing the traditional pre-approval review. There's a lot of other elements to this and how this system can be leveraged even further in the span of the short little time we've had here. It's impossible to go through everything, but the practical reality is when you look at the investment that's required, you're going to be looking at essentially per use, per quote, essentially a $49 insurance fee. Again, it's refundable in the first 60 days. And Alan, your cost structure is about $300. It's about $400 to get started with your system. And again, this is company wide. And then each quote you would issue as a company within the first 60 days is $25, and even after that, we're talking $50 per loan. And again, you're only going to issue the guarantee or quote on deals that actually meet the standards of how many verification questions did your system ask again? It's like 100
Well,
something?
depends how complicated the scenario is. I mean, it gets out to what if they're buying a condo and they're going to have 3 other properties and they have 2 businesses and the spouse has two W-2 jobs. There's going to be a lot of questions because you want to ask a lot of questions. I want to make sure
but the system is
good.
right.
I want to make sure they know they can get access to the system and look at it internally for 60 days. But they're only going to send you $49, and Erik will return the $49 to you if after you review the entire system in-house. If you don't want to use it for any reason, you'll be absolutely $0 out of pocket, and we're going to have some special pricing for the first callers that's going to extend the testing period out for 6 months.
Right. So, guys, here's how you get more information about the Guaranteed Mortgage Quote system. If you're interested in talking to your company about it, again, I encourage you to coordinate efforts with your, your company, sales managers, compliance officers. There's really 2 key individuals I think need to be on that call. The company level, C-level executive, sales management team, as well as the compliance management teams. Those 2 folks are going to be involved in the decision-making process about how to help you get this set up for your company. They're the people that you need to be connecting with Alan on. Now, 2 different ways we can get you access. One, you can email Alan directly to set up a demo and consultation time for your specific company and introduce them to this. And again, you'll have a copy of this recording Yes. Okay. I'll get back to that question in just a minute, guys. Let me just finish this little comment here, and then we'll get back to a little bit more Q&A here, as we have a little bit of extra time today that we can go a little long if we need to. But email Alan at guaranteedmortgagequote.com, for setting up a consultation appointment with you and the senior executives that need to be involved in the decision part of the process. Or you're welcome to, if you want, you can go ahead and post in the Q&A right now that you have interest in finding out more about the Guaranteed Mortgage Quote system. If you go ahead and post that information in the Q&A with the best phone number and email for Alan and his team to contact you for coordinating an appointment for that demo, we can certainly set that up for you. Again, please just go ahead and give Alan the best phone number and email address for posting into this webinar platform, and we'll make sure our team is going to follow up with you. Again, like I said, this is you have an opportunity to become a part of something 9 years in the making that is going to revolutionize the mortgage loan intake process. And you have an opportunity to be first to market. There's a great marketing book out there called The 21 immutable laws of marketing, and it's a very thin book. It's a little bit hard to find, but basically one of their number one laws of marketing is even if you're not the best, be the first. I mean, think about all the brands that are, sustainable market share leaders in their business category, products or service-wise, and they're not the best product out there, but they're the most widely used because they were the first one to hit the streets with that concept. I mean, I won't get into Apple versus, the first example that comes to mind is Apple. I hate iPhones, but I don't know, maybe some of you are going to hang up on me right now because I said that, but the fact of the matter is Apple was the first smartphone on the market that really was a functional smartphone. It's not the best one in most people's opinion these days, certainly not mine, but hey, that's, matter of opinion. However, iPhone has a significant market share advantage because they were the first to launch the product. So keep that in mind. Anyway, so there's a couple of key questions we're going to get back to here. I am going to jump back to a little bit of a Q&A mode here for a little bit. There was a question here from someone asking about, I understand correctly, guaranteed mortgage quote is for direct lenders, not brokers. Is that accurate, Alan?
Yeah, because yes. Now, Erik does have that idea to try to work something in on the wholesale function. We were planning to launch directly through lenders and not go through the wholesale market, but Erik has some ideas on how a broker may be able to take advantage of at least part of the system through the wholesale channel. But for now, yes, you must be a lender, not a broker, not a table funder, but an actual lender. Now, if you do broker some deals out, we'll still sign you up, and you agree that you can use the software on a brokered loan, but you agree not to use, and I'll still say the guaranteed mortgage quote, you agree on brokered loans not to use the guarantee. Because if you have to pay a guarantee, if you make a mistake but you can still salvage the loan, you can pay the guarantee as a reduction in closing costs. So if you started out and you thought you were going to do a VA loan, but you messed up the residual income test, and you could switch it over to an FHA loan, they had the down payment, they could stick with you, but you would give them a reduction in the closing costs on the FHA loan. So that's right. One option as opposed to just a direct payment. Now, if you completely, botch it and kick the can all the way down the road and you've messed it up so bad they don't qualify for anything, then yeah, the direct payment's going to have to be the solution. But how often are you doing that? If you're making those mistakes a lot, you probably shouldn't be using this system. This is for people that are real professionals, know what they're doing, looking for a way to stand out from the crowd that just talks a good game but can't deliver.
Now, keep in mind, guys, there's two other things that I want to answer with that question, and unfortunately the gentleman hopped off the call, but I'm going to answer it anyway. One, we are looking at connecting this system for some wholesale lenders. We are reaching out to some. In fact, later this week I'm going to be at a conference with a lot of senior executives from some of the bigger wholesale companies and looking at making an introduction to them to get them to think about considering offering some of this type of system, offering this system. Keep in mind that, guys, the lessons of what we learn here is the better, the more accurate job you do on the front end of actually validating and reviewing the information, the more effectively you're going to be able to, even if you can't issue a guaranteed mortgage quote because that is a trademark, patented labeling and title, it's registered, reserved, kind of quality, you could still do a very thorough pre-approval, a validated pre-approval issuance. But keep in mind, a lot of this goes back to some of the CFPB commentary with their final rules on loan officer compensation that came out back in January. There are advantages certainly to being a broker. I was a broker most of my life. The second time around as an originator, but the reality is that there are some disadvantages too. One of which is, like, for example, the broker loan officer cannot make sales concessions. CFPB has come out and said with LOComp you can make sales concessions to match a competing offer from a competitor, a lower price offer. You can reduce fees and that kind of stuff. on LO comp arrangements, but it can only be done by the lender, not by the loan officer or originator. And as broker, the company is essentially considered the same as the individual originator.
Exactly.
Again, and you know, I know, Alan, you've looked at many different ways of getting around that firewall. Hopefully some of that can be resolved regulatorily over time, but for now the restriction exists that concessions can only be given by the lender, which is why the guarantee would have to be issued by the lender, not the originator.
Exactly.
All right, other questions and comments, keep posting them as we come in here. There are a few more questions coming through the pike. Let me give me just a second to read some of these. And again, well, I guess like I said, with the whole, you know, with the whole lender versus broker thing, if you are a broker and you have a good relationship with a wholesale company that you think might be interested in doing something like this, you know, give me a call or give Alan a call or shoot him an email and kind of let him know what you're thinking. And if you happen to be in contact or have good relationships with senior executives at some of these, you know, bigger wholesale and correspondent lending companies, you know, we would love to talk to you about getting connected with them, and there might even be a potential deal we can work out where there could be a you know, some financial element to that. I don't want to make a false claim there, but anyway, keep that in mind. All right, so a couple of quick things. Any additional questions you guys all have as we're moving towards kind of a wrap-up to today's program? I want to reinforce a couple of key concepts and ideas just as we go towards you know, hanging up here. Keep posting any additional questions you have. I mean, one of the things that I want you to think about is, you know, we've spent a lot of time, energy, and effort working with literally thousands of originators across the country, training and coaching them on better business development systems and strategies. One of the key systems we've developed, which you've been introduced to a very, very small component of today, which is very consistent with this guaranteed mortgage quote program, is what we call the Power Partner Development System. And there are a number of key conversations that we incorporate into that, of which we've talked about the value of time conversation with agents, the incubate leads, and let us worry about the everything other than the ready-to-go nows, and then also how to opportunity and boost lead flow with selling the seller strategy. These strategies, if used even without the guaranteed mortgage quote system, if you use those 2 or 3 strategies, the value of time conversation, the bank of opportunity conversation, and the selling the seller conversation, what's the likelihood you couldn't add at least 1 or 2 additional deals for every deal you're working right now by leveraging those additional cross-sell opportunities? And that those 2 deals lead to 4, and those 4 lead to 8, and lead to 16, and you can literally explode your business in a relatively short period of time. You know, I got my practice to where I was doing about 20 deals a month in a little over 4 years. I literally doubled my business year over year, 4 years consecutively, and that's how I grew it. It was recognizing and leveraging each of those opportunities, using the systems and strategies that I learned from those who had gone before me, because, you know, I was smart enough to realize that I didn't want to spend the time beating my head against a wall, reinventing the wheel. So I went out and invested in the training and resources that taught me how to do it. I fine-tuned it and refined it and developed it into the systems that we teach today through our Maximum Acceleration program. If you're interested in finding out a lot more, there's basically 3 different levels of service we offer. We have a library of home study course materials. We have a group, our on-site coaching programs available, and we have our one-on-one individual loan officer coaching. One of the key systems I want to introduce you to, though, is this Power Partner Development System. There's actually a home study course version we offer called the Double Your Income with Power Partners training. This is a 6-part on-demand coaching workshop. It walks you through, step by step, all the key elements and conversations of the Power Partner Development System, which is designed to help you create massive growth and increase in your volume and production, the level of commitment and loyalty you gain from realtors, and how that loyalty can be created and secured in a minimum of time, so that you can develop an ongoing stream of business that comes in regardless of whether you were out there marketing for it or not, so that you have as close to anything that we can find in the mortgage industry that becomes an annuitized business. Just like the guaranteed mortgage quote, I mean, when you have that system in place and your realtors are depending on that guarantee as part of their front-end selling strategy, they're going to realize they can't afford not to introduce you to every buyer and every seller every single time because nobody else is giving them that caliber of guarantee. And it's systems and strategies like that that we teach in this more comprehensive home study course, this Double Your Income with Power Partners. So if you're interested, the regular retail price on that program is $695. I mean, if you only converted one loan out of what you learned from that program, you'd be getting about a 3 times or 300% return on your investment. But for those of you that are interested, we can offer it at $297 today. And actually, I think, you know what, I'll tell you what, I'll go even one step further. If you go to our shopping cart right now, if you go to the mxlcoach.com/shop on that shopping cart tab, the click here button takes you into the actual shopping cart. In the shopping cart, you select the DVD digital box set programs and select the Double Your Income program. Add it to your shopping cart, and just before you type in your credit card information, you type in the DBLMAX discount code. You can save an additional $50 if you go ahead and hop to that website right now. That'll make it $247 for this turnkey end-to-end system that you can implement to learn everything you need to know about how to build high profit and high volume referral partnerships with realtors in a minimum of time using the Power Partner Development System. Of course, if you're interested in more of our robust one-on-one coaching, or if you don't necessarily need help with getting realtors, but you have other operational and capacity challenges that you're trying to break through to get to the next level of production, maybe the one-on-one program is a more effective program for you. Of course, over the years, the best way we found to help people understand the true value of a one-on-one coaching program is to actually experience it. Go through a actual coaching experience with one of our one-on-one coaches, and that's what we set up our strategy sessions for. If you're interested in taking advantage of the strategy session program, there's no cost or obligation for the service. You'll spend an hour with a coach, go deep on a specific topic or challenge. You'll walk away with a complete action plan and a little bit of knowledge about if and when it might make sense for you to move forward with some coaching. By doing that, all you need to do is, if you're interested in participating in the strategy session, go ahead and just post in the Q&A section of the platform that you have interest in that program, and we'll get you set up. Make sure you give us the best phone number and email address to contact you for scheduling for that strategy session. Like I said, scheduling can be a little bit of a challenge if we try and do it back and forth. Of course, in the coaching world, we have to juggle the schedules of a limited number of appointments available with our team of coaches, and they are filled on a first-come, first-served basis. So if you want to go ahead and, if you are serious about taking your business to the next level and you want to invest a little time in finding out whether coaching is the right fit for you, go ahead and just pop on here and let me know the best phone number or email address for our team to contact you to schedule that one-on-one strategy session with one of our coaches. Again, just a quick reminder, if you are interested in finding out more information about the Guaranteed Mortgage Quote System and how to get it set up for your company, again, same thing. You can post the best phone number and email address for Alan and his team to contact you to talk with your company about the possibility of setting up the system for you. Go to the Alan at guaranteedmortgagequote.com. Email him, let him know that you would like to go ahead and set up an appointment to talk with him. Of course, make sure you mention maximum acceleration, or if while you're on the webinar platform, go ahead and just drop that into the Q&A section of the platform right now. Post that you're interested in talking with Alan about setting up the Guaranteed Mortgage Quote System for your company. Give him the best phone number and email address for he and his team to contact you to coordinate scheduling of a kind of a demo and system setup consultation, and he'll get you rolling down that path in a very short order. That being said, there's just one last little bit of piece I want to cover with you all before we turn you loose here. As we end with every webinar, you know, you've invested some time in today's program. Please don't squander that time investment. Take just 2 or 3 more minutes here before you jump to that next phone call or email and put together an action plan for what you want to do with the ideas you heard in today's program. Take just 5 seconds. Ask yourself, what was the most valuable thing you heard in this program? Second question, what action must you take to make this a part of your daily business from this point forward? Third, by when are you going to implement that action? And fourth, who's going to hold you accountable to that? You know, we've talked about so many times in this webinar series the value of accountability and the importance it has on following through on action plans. You know, in 1998, Brigham Young University did a research study about what it took to put ideas into action, and what they realized is if you did these 4 things, you would have a 95% chance of follow-through and implementation. Of course, if you don't have a good accountability partner, if you don't have that outside observer who's knowledgeable, who you trust, who's consistent and persistent and will follow up with you as you're targeting the completion deadline on this stuff, we'd be happy to talk with you about how to help you in that respect. And if there's anything else myself or the rest of the team here at Maximum Acceleration can do to accelerate your growth, please don't hesitate to let us know. Post it in the Q&A. And that kind of thing. By the way, if you are posting, please, if you don't mind, clarify whether you're more interested in the coaching strategy session or the consult with Alan and his team from Guarantee Mortgage Quote. If you would just please clarify for me whether you're looking for the GMQ setup consultation or whether you're looking for the strategy session consultation, and or both. I mean, if you're interested in both, we'd be happy to help you out in that respect, I'm sure. But otherwise, guys, that's kind of the final thought I had as far as making sure you get the most out of this program. You know, obviously, we definitely want to celebrate and be respectful of your time. I want to challenge you and congratulate you for being the small percentage of folks who take the time, energy, and effort to really focus on how to perfect and refine your craft so you can continue to improve over time. We look forward to seeing you on future webinars in the series. Keep checking the calendar. We've got a lot of exciting things coming up, so be watching your emails. Hop on the website, mxlcoach.com/webinars, and check out what we've got coming up. We've got some exciting things planned for mid-December as far as a Performance Power-Up Conference, or we're going to be doing as a live conference. We just kind of put the final details on the deal this week, and we're getting ready to start advertising that a little bit later this week. But go ahead and make note of the dates, the 15th and 16th of December, and be watching for more information to come in the next couple of days here. Otherwise, Alan, I just wanted to give you one last opportunity just before we close out here to go ahead. Any final comments or suggestions you'd like to make to the folks? Anything that you'd like to share with our audience here?
I appreciate their time. I appreciate their time. Again, the cost is none, $49 to Erik. It's completely refundable within 60 days. Gives you and your whole management team a full look at the system. If you don't want to use it, just tell us it's not for us. Erik will give you your $49 back. So take a look, and hopefully we'll help you grow your realtor referral business by tenfold. Thanks for attending.
Awesome, guys. Well, we are actually shutting down the recording at this point. I'm going to hang out for just a few more minutes while I clean up a couple